What's up everyone, Tom here with another video. Warren Buffett once said it's better to be fearful when others are greedy in the stock market. Today we'll discuss together several key bits of information that I think might help everyone navigate the sea of noise and confusion currently going on in the markets right now. Would we invest at all-time highs in the stock market? Let's see what Warren Buffett thinks about that. Stay tuned. So possibly the best place to start today's video is by discussing one of Warren Buffett's most famous quotes, and that is, we simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. And of course, being greedy when only others are fearful during this crisis has certainly paid off for many investors out there. But what about the first part? What about being fearful when others are greedy? At all-time highs in the stock market, and especially all-time highs in the NASDAQ, is now the time to start getting fearful? Well, I certainly think that this Warren Buffett letter to shareholders back in 2000, which has resurfaced on Reddit this week, shows us the way of several key bits of information that Buffett would be telling us right now if we were having lunch with him about the markets. In that letter, he said, "Nothing sedates rationality like large doses of effortless money." And this really resonated with me. And I think it's like very similar to what he's always told us throughout time. But human nature is trying to basically be the person that makes the most amount of money before everything falls apart. And right now, Warren Buffett's kind of showing us that he doesn't necessarily have as much faith in the current valuations in the market as we would think. Is he buying stocks? Yes, he's buying stocks that he thinks have value. But he is also buying something he said he wasn't going to, which is a gold stock. It's not technically gold, but it's a gold producing stock. So many people be aware of that in the markets, but what about where the markets are right now? From a technical analysis perspective, can we learn anything about where the markets are and where the markets may go to? Well, one of the key things that Wall Street likes to use is Fibonacci extensions. In uncharted territory, it's one of the tools that you can use technically to find out where the market might go next. So Warren Buffett obviously may not use this tool, but it still shows us when markets are going parabolic or markets are reaching a resistance point, potentially for dip buying, where we can get back in at cheap Warren Buffett valuations. So here's the NASDAQ right now, and we've got the Fibonacci extension on it. And you can see that it just reached the 1.618 Fibonacci extension. And this is heavily used by Wall Street. So we've just reached that off the crisis lows right now. We've also got the key psychological level of 12,000 coming up. And the markets usually like to stop a little bit before that point and then sell off. And why do they do that? Because a lot of people have target zones of 12,000. More specifically, the kind of people that are certainly in the markets right now, which is like all of us, retail investors. So how do we know Fibonacci extensions work so well? Well, let's take Apple as an example. Apple is a classic case of Fibonacci extensions working, but also at the same time, the largest stock in the stock market. So here we have pre-crisis high, two lows, and we've taken the extension out, and we can see that the 1.618 Fibonacci extension has been reached and the Apple sold off. And then we can see the 2.618 Fibonacci extension reached off a parabolic move, by the way, and then started selling off. So it got through that $500 resistance in terms of the psychological level, and then started selling off that zone. And these are still decent sell-offs that occur. During the last move, we sold from $400 down to around $357. During this move, we've only sold so far $515 down to around $491. So there's still potential selling downside coming in from Apple, let alone the NASDAQ hitting that key Fibonacci extension. What other things help us technically to find out whether a market's reached its high or not? Well, one of them can also be pivots. We've talked about that a lot on this channel. And if you're interested in this type of stuff, please remember to subscribe and of course hit that alert button. So the NASDAQ just reached its monthly R2 pivot and it found some resistance, sold off a little bit, and at the same time we're at that, of course, Fibonacci extension. Over the bull run that's happened since the crisis, we have not seen the pivot R2 being breached by too much, and every time it has breached it, like it did over here, it's found resistance and sold off a bit after that point. So it does point to a fact that during the last couple of days of August, we might see the market slow down a little bit into the Jackson Hole weekend agreement and of course into the Fed announcement this week. But what would Warren Buffett be saying about the markets right now? Do you think that he finds value in it? Well, we've spoken about how he's been buying Berkshire Hathaway, how he's been buying Bank of America Corporation, and other stocks that he thinks have good PE ratios. Now, I've got the forward price to earnings ratio here, and I've done that because this is the average 52-week analyst expectation for price to earnings over the next 12 months. And always you need to remember the stock market is a forward-thinking thing. It thinks we're already out of the crisis and everything is looking okay. But does that mean that the valuations on some of these stocks are a good point, or are they a scary point and we need to become a little bit fearful? Well, obviously FANG stocks like Microsoft, Apple, Google, Facebook, and Amazon, we all know these are very high right now. We also all know that if we buy them at the right price, we can make a lot of money very quickly and potentially sell out of them. So people investing in them long term, well, several people would be. But I think there's a lot of trading mentality coming into these stocks, which is totally fine if you understand the trading mentalities in there. Let's take a look at some of the other things that we've discussed on this channel over the last couple of months. So over the last couple of months, we've discussed the Shiller PE, and this is a little bit of an older method for trying to figure out whether the stock markets are fairly valued right now. So the Shiller PE is the price to earnings ratio based on an average inflation adjusted earnings from the previous 10 years. Is it really high right now? It certainly is. Is it the highest it's ever been? It's not tech boom high, but at that point, we had companies that were literally less than 5 years old in the S&P 500. So at this stage, we're still incredibly high in terms of Shiller PE. If we look at research from Yardeni.com, they've got here a great S&P 500 forward PE over the last 2 decades. And you can see the tech boom over here on the left-hand side, and you can see where we are right now. So we're certainly at very high valuations post-crisis period in terms of when the Fed got involved in the markets. So valuations are not looking that great from a forward PE. Things have to go very well, very quickly for us to be looking at long-term investment opportunities, at least in the hot stocks right now. What about Buffett's own indicator? What's that saying? Well, Buffett's own indicator is of course based on historical ratio of total market capitalization over GDP. And currently that's sitting at an all-time high of 181.2%. Now, you could argue that this indicator doesn't work anymore because of globalization and the nature of tech businesses, but it certainly still paints a picture that we're at a very high valuation on the markets right now, and that we're also in semi-parabolic moves in some of the stocks in the index. Doesn't mean all of them. We saw in that price to earnings ratio, there still is value in certain sections. Now, what will happen if the market crashes again or dips? Usually the high valued, high growth stocks will crash significantly more than the value positions. In fact, the value positions may only sit around and not do that much. So this week, of course, it's all about Fed Chair Powell speaking on Thursday, August 27th, about Jackson Hole Symposium, and to kind of buy the rumor, potentially sell the fact event. We've seen every single time Fed Chair Powell is about to speak, the lead up of that event is a bullish movement, and we've seen that in the S&P 500 and NASDAQ this week. The NASDAQ's now hit that Fibonacci extension. It's at all-time highs, and we're at valuations that we've never seen on several of these key stocks, and many of those are hitting extensions and key technical metrics. So what about the S&P 500? Where's that at? Well, Fibonacci extensions, it's only just reached all-time highs, so you're not going to be seeing extensions off the move. But it'd be worthwhile putting an extension on over the longer term and seeing how the market interacts with that zone as it reaches it over the next couple of years, because I'm sure the stock market will move higher over a period of time. Where is it right now? Well, of course, it's incredibly strong, sitting at this 34.43 level. And we talked about previously this week how previous resistances, being the top of the market before the crisis and where it got to the other day, could act as support now. And this market has bought pretty aggressively off this 4-hour 20 exponential moving average. So if the market comes down, it may bounce off that level and actually buy up. But this being said, it's still a time where we need to start thinking about our plans in the stock market. Whether you're being fearful or you're being greedy, it doesn't really matter as long as you have a plan and you know how to get out of your trades. In terms of fear, market, greed kind of indicators, we're sitting at very high greed levels into potential extreme greed right now. And put call ratios and the fear and greed over time is starting to creep up there, with a point where we now need to be very, very concerned about where the market is right now. So in terms of the S&P 500, what happens next? Well, we probably have a bit of a buy the rumor, sell the fact into the Fed Reserve Jerome Powell's discussions this week. We have a pullback, maybe possibly into the previous resistances, and then a pickup off that zone. But that doesn't change that the longer this market goes on and the faster it occurs, the more we have to be fearful. So of course, Warren Buffett's warnings have always stood the test of time. And if you're investing in the market right now, it's always worthwhile thinking and remembering what the great man has to say. If you enjoyed this video, please remember to subscribe and of course hit that like button, and we'll see you for another video tomorrow. Happy trading, everybody, and good luck out there. Bye for now.